Good afternoon, everyone. My name is David Wu, and today's session will be on tax tips for first-time homebuyers. My name is David Wu. I am a chartered professional accountant. My areas of focus is in real estate tax, retirement income planning, and financial risk management. Before I get started, I would like to introduce my Realtor Alliance program. Okay. So this program provides free tax consultation for realtors and their clients. Okay, so there's no strings attached. If you're a realtor, I provide 100% client confidential consultations for free. I will not be soliciting your client or referring your clients to other realtors or brokerages. And I also offer free tax seminars for your brokerage. So if you want to have a training session for your realtors on a real estate and tax topic, please contact me. Or if you want to join the Realtor Alliance program or find out more details, please feel free to contact me at the information you see on the screen. Okay, so let's get started and let's examine and look at some of the common first-time homebuyer advantages available for first-time homebuyers. So let's look at the tax tips for first-time homebuyers. So first of all, let's talk about land transfer tax. Okay. So who pays the land transfer tax? How much do they need to pay, and can they avoid paying the land transfer tax? Okay. Land transfer tax is paid by the buyer of real estate. So if you're buying a home, you're buying a condo, or you're adding someone else to your property, whoever is being added to the title is responsible for paying land transfer tax at the time of closing. Okay? Now, if you are a first-time home buyer, okay, so the definition of a first-time home buyer is outlined in red that you see on the screen. You must not have owned a home anywhere in the world, and your spouse must not have owned a home after marriage in order to qualify for the first-time home buyer's plan. So, quite simply, if you have never owned a house, you would qualify. If you're married, um, as long as your spouse does not own a home after your date of marriage, you can still qualify for the first-time home buyer's uh, land transfer tax rebate. Okay, so what is this rebate? This is just some money that you can get back to help offset the cost of your land transfer tax. Okay, so provincially, you can get up to $4,000 back. And if you're in the city of Toronto, if you're buying in the city of Toronto, you can get up to $4,475 back. If your purchase price is below 368,000, then really you don't, and you're a first-time buyer, then there wouldn't be any extra money that you'll need to pay because the rebate would be enough to offset any land transfer taxes that's payable. Okay. I also want to mention that post January 1st, 2017, land transfer tax rebate is only for Canadian citizens or permanent residents. Now, what if you bought a property and you were about to become a Canadian citizen down the road? Well, what you can do in that case is you'll still be charged the land transfer tax. However, you can apply within 18 months from the date of your purchase or your transfer um, to get a rebate for the land transfer tax. Okay, so you can pay the land transfer tax but still apply for the rebate afterwards if you qualify. Okay, a couple of other items to mention is that if you're buying a home with another individual, so you have joint ownership in the property, but one of you is a first-time home buyer, the rebate will be prorated based on ownership percentage of that first-time home buyer. So if you're buying a property with your parents, for example, and your ownership percentage is 50%, then 50% of the land transfer tax rebate you can claim. Now, there is one exception where if you have to add a parent on title for mortgage purposes. Okay, so for the purpose of getting a mortgage, if the bank requires you to add your mother or your father on title, you can still qualify for 100% land transfer tax rebate if you can provide a bare trust agreement from a lawyer and also a letter from the bank indicating that the reason why your parent, your father or mother, was added to the title was for mortgage purposes only. Okay, so if you have a bare trust agreement and a letter from the bank, then you can still qualify for the land transfer tax rebate. What if there's transfers between spouses? If there's money involved and you are transferring a property from one spouse to the other, and there's money that's exchanged, land transfer tax will still apply. Now, there are three exceptions here. If you transfer the property and the only consideration is assuming the mortgage, okay, then land transfer tax will not apply in that case. Secondly, if there's a written agreement of separation, or if there's a court order or judgment requiring you to transfer the property, then land transfer tax will not apply. And lastly, what if you have a situation where you receive a property as a gift? Okay, so because there's no consideration involved, there's no money exchanging hands, any property that you receive as a result of a gift, there will not be land transfer tax applied except when you assume the mortgage. So if you're assuming a mortgage, the value of that outstanding mortgage will be subject to the land transfer tax. So that's it for the land transfer tax. Let's move on to the RRSP home buyers plan. So there has been a change to this RSP home buyers plan as of March 19, 2019. If you are a first-time home buyer, you can withdraw up to $35,000 tax-free from your RSP to buy a home for yourself or a related person with a disability. Okay, so the related person does not have to live with you. So to qualify for a first-time home buyer, the definition is a little bit different from what we discussed with land transfer tax. Okay, so if you have not owned a home in the current year or the previous 4 years, you did not occupy a house owned by you or your spouse or common law partner for more than 4 years, then you can uh, qualify for the RSP home buyers plan. So how this plan works is if you have an RSP, you can take out up to $35,000 tax-free to buy a home that's going to be for your principal resident. You have 15 years to repay the money back into your RSP. Now, it could be into any RSP you choose. It doesn't have to be the same with the same institution that you had made a withdrawal from. Okay, so you have 15 years to pay it back. Now, it's very important to note that the money needs to be in your RSP account for at least 90 days in order for you to qualify as a tax-free withdrawal for the home buyers plan. Okay, so please make a note of the 90 days requirement. Let's run through a simple example so that you really understand how this plan works. Let's say you have a couple, Chris and Sally, they're both first-time home buyers. And in 2019, they withdrew $35,000 times 2, totaling $70,000 tax-free from their RSP. The amount that they will need to repay would be $35,000 divided by 15 years, which equals to $2,333.33. Each of them will need to pay that as a minimum starting in year 2021. Why 2021? Okay, you don't need to make any repayments in the year of withdrawal, so 2019. They also give you a 1 year grace period. So 2020, you won't need to make any repayments as well. So the very first year to make the repayment in this case is in year 2021. If you don't make the repayment, the $2,333 just gets added to your income for that tax year. So you'll just be reporting it on your income taxes, which will result most likely in a little bit more taxes payable for you in that year. The last item I want to cover for first-time home buyer is something called a first-time home buyer tax credit. This is a non-refundable tax credit where you can save up to $750 in federal taxes. Okay, so even if you buy the property joint owner, okay, and one of them is a first-time home buyer, that person who's a first-time buyer can claim the full $750. Now, in order to qualify, the definition of a first-time home buyer is that you did not live in a house owned by you or your spouse, common law partner, in the year of acquisition or in any of the 4 preceding years. The home also needs to be your principal residence. Okay, so it needs to be where you're living. Can't be a rental property. Okay, so this means that you can still qualify even if you owned a house in the past. Okay, so what I do with clients is I always ask them the question, did you buy a house recently, and did you claim the first-time home buyer amount tax credit? If they didn't, oftentimes there's an opportunity to get them an extra $750 just by filing an adjustment to their tax return. Okay, with that, I want to conclude with my Realtor Alliance program. So thank you very much for listening in. Again, if you're a realtor, I provide free tax consultation for realtors and their clients. And to find out more details about this program, please touch base with me based on the contact information you see there. And if you're a real estate brokerage, I am happy to provide training on tax-related topics. Feel free to touch base with me as well. Thank you very much, and I hope everyone has an awesome day.